Good morning, welcome to Ainsley News. It's Tuesday, 4th of August. Taking a little break from crypto news today, and we're still talking Australia's zombie problem. While all eyes are on Melbourne as the epicenter of economic hardship on the back of new lockdowns on this second wave, Queensland is most certainly not out of the woods despite perception of life as normal again. Yesterday, the Courier Mail revealed the results of a business survey that they found 1 in 5 Queensland businesses were running as zombie businesses that would really collapse within 3 months of government support measures being removed. 1 in 5 is 20%. That's extremely high. A zombie company is generally defined as one whose income solely pays the interest on the debt that it has and not repay the principal or distribute profits. Technically, they are insolvent. That 20% of businesses put themselves in this category must be for cause of great concern, given the results come whilst Queensland largely enjoys an open economy, albeit still with considerable restrictions for restaurants and bars. And of course, a tourism industry shut off from large sections of Australia. ABC's chief economist, Alan Kohler, delivered a sobering analysis yesterday with estimates with as many as 100,000 businesses to go broke, and this via macro business. The Corporations Act was amended at the same time as JobKeeper was brought in March to allow businesses to trade while insolvent for 6 months. This is usually an offence, and that ends on September the 25th this year. Demand for air travel and tourism has virtually collapsed, and that has virtually disappeared. There are thousands of businesses that depend on people travelling, like retail, restaurants, security firms, and caterers. But in other private data, it's showing that trouble is brewing more broadly. The average delay in paying invoices across all industry has blown out from 11 days to 49 days. Basically, the Safe Harbour Amendments is keeping thousands of zombie businesses from going to the wall until September the 25th. Insolvency practitioners say they are bracing for a tsunami of insolvencies after October. One told me he wouldn't be surprised if 100,000 businesses went broke. Insolvencies caused by the GFC peaked in 2012, 4 years later or after the GFC. And that's what always happens. The average time between a business going insolvent and admitting it is 18 months. There's going to be a long, catastrophic wave of insolvencies that will lead to higher unemployment and pressure on the banks. The depth and drawn-out nature of what this recession is likely to be is the key message for the V-shape believers. Whilst Australia is certainly in a recession after 2 consecutive negative GDP prints in Q1 and Q2 of this year, many are hoping for a stronger Q3 print. Remember too, it is much easier to turn positive after such a low base, as was left after Q2. But regardless, there are growing concerns even this may not eventuate. The NAB Business Survey is one of the key reports economists look to, and yesterday the NAB chief economist warned a Q3 bounce is too early to call. And this from ABC News. In terms of sharpness in the decline in activity, this makes the recessions in the 80s and 90s look like child's play, Mr. Oster says. Unemployment did get to 11% in the 1990s recession, but it took 2 years to get there. National Australia Bank will update its forecast next week after the results of its latest business conditions survey. But Mr. Oster already knows what to expect. I would expect conditions, or certainly confidence, to go deeply south compared to where it was, he said. NAB downgraded its GDP forecast for Q3 to just 1%. Again, off a very low base, on the federal government's July budget update. That leaves very little room for further deterioration, and Victoria, a quarter of Australia's GDP, has them unsure we won't see a third consecutive quarter of negative growth. The same article has the Grattan Institute and Delaware Access Economics predicting we could see a full year of recession, something not seen since 1982. This, of course, plays out without enough people actually understanding the implications. Everyone knows of someone who has withdrawn their super and spent it on toys or living large on a high wage from the government than they received prior. Ask any motorcycle or jet ski shop. The perception that this is somehow not real or the government will somehow keep up the helicopter money indefinitely is setting up many for a bigger fall than what would normally happen. The line up to interest or an unprecedented online orders suggests there is, however, a growing number of people starting to understand how this could all end. Increasingly, too, we are seeing many older customers looking to protect their children, adult and kids alike. every extension of handouts, every extension of business support, and every extension of home buyer grants just kicks the can down the road for the next generation to deal with. The gift of gold could be the greatest gift a parent could give. And that's news today. Skipping crypto, which is a bit sneaky. But of course, you can always go to ainsleywealth.com.au to check out any of our other cryptocurrency news, because there's always cryptocurrency news. And ainsleyBullion.com.au to purchase any gold and silver. We'll catch you tomorrow.